Hello and welcome to the Business Standard Morning Show. I'm Vinu Sandhu. Let's take a look at the stories for the day. It has been a month since the US-based short seller Hindenburg Research came out with a damning report on the Adani Group. Ever since, the group's stocks have behaved erratically, keeping investors and regulators on edge. On Thursday, the Supreme Court formed a panel to review regulatory mechanisms and protect the investors' interests. The top court also told SEBI to complete its probe within 2 months. What next in this saga now? Bhaskar Kumar's report tells us more.
The Adani-Hindenburg saga continues to unravel. On Thursday, it added yet another chapter, which might finally answer some of the pressing questions that have been raised about the Adani Group in recent weeks. While hearing a clutch of petitions, the Supreme Court formed a committee which will review the regulatory mechanisms and suggest ways to protect Indian investors against volatility of the kind which has been witnessed in the recent past. The committee will also investigate the Adani Group. The panel will be headed by former Apex Court Judge Justice Abhay Manohar Sapre. The other 5 members of the committee include O.P. Bhatt, a former chairman of the State Bank of India, retired Bombay High Court Judge Justice J.P. Devadhar, K.V. Kamath, the former chief of the New Development Bank of BRICS countries, Infosys co-founder Nandan Nilekani, and Somasekhar Sundaresan, a securities expert and lawyer. And what is the remit of the committee? First, it will look into the factors that led to the recent volatility in the securities market. Second, it will suggest measures to strengthen investor awareness. Third, it will investigate whether there was a regulatory failure in dealing with the allegations made against the Adani Group. And fourth, it will suggest measures to strengthen the statutory and regulatory framework. The committee has been directed to submit its report in a sealed cover before the court within 2 months. So, what do experts think of SC's decision and its possible result? Also, what comes next?
First and foremost, Supreme Court should be complimented for taking up a view on the subject by institutionalizing the process of inquiry. This is fundamentally very important in any kind of democracy. I think hereafter with this committee's report, the regulator will get a chance to probably strengthen their framework in form of creating the investigative based or inquiry based information which has been disclosed by one and everybody in future.
There are allegations of round tripping. There are allegations of foreign funds being used as fronts. So the challenges for the committee may go beyond our jurisdiction in that sense of from a geographical perspective, because there are Mauritian entities involved, there are other foreign entities involved which have investments in Adani Group of stocks. So to that extent, not just SEBI, maybe DRI or other investigative agencies may also have to be used by this panel.
But what will be the challenges that the committee might face?
I think everybody, every politician, bureaucrat, as well as businessman has been using this round tripping for ages, not just these couple of years, but probably for the last 20 years. And this is a market mechanism that needs plugging. And I'm not sure just 2 months would suffice for them to investigate or make recommendations and sort of come out with solutions which are implementable and which are effective.
The Securities and Exchange Board of India has also been directed to investigate Hindenburg's allegations against the Adani Group. It must probe whether there has been a failure to disclose related party transactions, whether there has been a violation of Section 19 of SEBI rules, and whether there was any manipulation of stock prices. SEBI shall file a status report before the court within 2 months.
SEBI has to look at the exchange data firstly as to what is the flows or the last 1 or 2 years, which is the profile of investors who have bought shares of these Adani group of companies. 2 is where are they located? Has there been good KYC done? Has SEBI been able to identify the ultimate beneficial owners of these investors?
Ultimately, how will the Adani Group be affected by these developments?
Because company has disclosed all the information. So all the reason to believe that the company has been fair and transparent. And after that, I think if this gets validated to the committee and thereafter Supreme Court and SEBI, then probably investor will remain much more confident going forward in the affairs of the group. So I would remain relatively more positive on the possibilities than otherwise.
The 7 listed companies of the Adani Group have lost about $135 billion in value since the Hindenburg report was published. Welcoming the Supreme Court order, the chairman of the group, Gautam Adani, has said that it will bring finality in a time-bound manner and that truth will prevail. If that happens, then the apex court's decision could play a part in laying to rest the doubts that may have emerged about the Indian capital markets.
So will the Supreme Court's action in the Adani-Hindenburg saga check the bleeding in the capital markets? We'll have to wait and watch for that. Meanwhile, India received a piece of positive news from the government corridors recently. This was in the form of the periodic labour force survey report. It presented a positive outlook of employment in the country. Even the unemployment rate is on a steady decline. But what does the fine print say? And what does this report tell us? Debarga Sanyal finds out.
Just like the GDP numbers, the latest Periodic Labour Force Survey or PLFS report too suggests that the economy is finally recovering from the massive pandemic blow. The report, which covers the period from July 2021 to June 2022, puts the annual unemployment rate at 4.1%. It is the lowest since the first PLFS report for 2017-18 was released. And this drop in unemployment rate may not be driven by the people dropping out of the job market. The Labour Force Participation Rate, or LFPR, which shows the percentage of people either working or seeking work in the population, has also increased significantly in the last 5 years from 37.5% in 2018-19 to 55.2% in 21-22. These figures are of the period when the country was recovering from the second and most devastating wave of COVID-19 pandemic. Economy was opening up and industries were taking gingerly steps towards normalcy. So the positive numbers are not unexpected. While the overall unemployment rate and labour force participation rate present a good picture, a closer look revealed the fault lines, the unequal recovery, especially in the unemployment rates and LFPR for women. While the unemployment rate for women in urban centres saw a year-on-year decrease to 7.9% in FY22 from 8.6% in FY21, unemployment amongst rural women remained at a much lower 2.1%. Additionally, the overall unemployment rate for urban women increased narrowly to 9.6% from 9.4% during the December quarter. Experts point out that even as more women receive higher education, the rate of women's unemployment in urban areas isn't declining proportionately.
Many people have many hypotheses. One of the things is that if a woman has better education, the chance of finding a better match is enhanced, or that's what's socially, that's the signaling that's being sent out. Many people are talking about the lack of infrastructure to manage the home or the home. Whether it's your children, the maid, are one of the associated reasons behind women in urban India dropping out of the workforce. Safety, transport, I mean, the list is quite long, and none of them, honestly, we should accept and make peace with, because it's We all know that it's a very costly proposition not to have enough women in the workforce and how much it hampers the economy.
The major difference in rural and urban LFPR numbers for women are also worrying. For rural women above the age of 15, the LFPR is at 36.6% in 21-22. It is a worrying 23.8%, however, for urban women in the same age category. In contrast, 78.2% of rural men above the age of 15 work, and the corresponding proportion in urban areas is 74.7%.
In the urban areas, it has not improved, because the recovery that took place in 21-22 vis-a-vis the COVID year was not so much in some of the service sectors in the economy where women labor force gets relatively better absorbed. In the rural areas, a lot of female labor force participate by working in the agricultural sector. And employment in the agricultural sector tends to be subsistence employment, especially for women, because women are not as mobile as their male counterpart.
The requirements of subsistence work often prevent people from actively seeking stable employment. The dip in the unemployment rate also hides a large number of self-employed as well as the presence of disguised unemployment. India's worker population ratio, or WPR, defined as the percentage of employed persons in the population, has increased marginally to 52.9% from 52.6% last year. However, this also means that more than 47% of India's population is still not employed. Experts believe that India's latest employment numbers should not be a cause of complacency, especially if the government aims to have women as 50% of India's workforce by 2047. Rather, a deeper examination of subtler socio-cultural trends restricting greater participation of women in the country's labor force.
Unemployment rate in urban areas had shot up to 20% during the pandemic. So the 4.1% figure indeed suggests a good recovery. Moving on, several Indian drug makers have recently come in the line of fire from the USFDA, which has stepped up its regulatory site inspection after a COVID-19 lull. Cipla too faced the US regulators' ire. What does this mean for the company and its stocks? Harshita Singh's report has the answer.
On February 18, the US FDA issued Form 483 with 8 observations for Cipla's Indore facility, which contributes around 5% of the company's revenues. Since then, the stock of the drug maker has been reeling under pressure and has shed over 12% versus a 3% drop in the BSE Sensex. Analysts have turned cautious on the company as the US FDA action is likely to delay the launch of Cipla's key asthma treatment generic Advair in the US. This is likely to affect the company's revenue in the medium term. The impact, though, could be limited if the issue is timely resolved.
So I think the recent news flow is an overhang on the stock of Cipla from a short to medium term point of view. But from a long term point of view, we believe that whatever issues are there can get resolved. What remains to be seen is how soon the management is able to take appropriate action and resolve all the issues. This can also translate into earnings coming below expectation. And the fact of the matter is that most of the pharma companies over the last year or so, post COVID issues getting, COVID issues dying down and normalcy returning and restrictions getting lifted, most of the pharma companies on Q3, Q2 and Q1 have not been as per expectation. In some cases, there has been disappointment in earnings. So you've seen some amount of underperformance in the entire pharma universe. This particular, news flow also can act as an overhang, like I mentioned earlier, and could impact fourth quarter earnings and possibly some amount of, overhang in the next financial year first quarter earnings as well.
Brokerages Prabhudas Liladhar and Motilal Oswal have reduced their FY24 EPS estimate on Cipla by 8 and 3% respectively to factor in the delay in Advair's launch. According to Prabhudas Leeladhar, Cipla had earlier guided $900 million to $1.2 billion US sales by FY25, which has got pushed back by a year given the ongoing plant issues. We now factor in $720 million and $760 million US sales in FY24 and FY25. Analysts believe that some of the USFDA observations are critical and could lead to an Official Action Indicated or OAI classification for the Indore unit. This comes after Cipla's Goa plant was also reclassified as OAI last year, delaying the launch of another key anti-cancer generic, Abraxane. An OAI classification impacts product approvals from a facility. In the short term, risks remain for Cipla's generic US business as the two sites are critical for approvals of its niche injectable and respiratory products. Street action will remain stock-specific in today's trade, while investors will keep an eye on the February services PMI data.
Over the last year, the Russian invasion of Ukraine has roiled the world economy and financial markets. Adding fuel to the ongoing conflict, Moscow recently suspended a nuclear arms treaty with the United States. Now, what is this New START treaty all about? Tariq Ahmed decodes it for you.
The New START Treaty is a nuclear arms control agreement between the United States and Russia. Signed in 2010, it came into effect in 2011, replacing the then expired Strategic Arms Reduction Treaty of 1991. Russia and the US had decided to extend the New START Treaty till 2026. But Russia has now decided to suspend the pact, accusing the US of trying to defeat them strategically in the Ukraine war. This treaty limited the number of deployed strategic nuclear warheads to 1,550 for each country. The previous limit was 2,200. It also limited the number of intercontinental ballistic missiles, submarine-launched ballistic missiles, and heavy bombers equipped for nuclear weapons to 700 units. The New START Treaty was effective in reducing the strategic weapons both the USA and Russia together had. Before the treaty, both the countries had more than 24,000 strategic arms. In September 2022, the number of the strategic weapons that the treaty prescribed to limit came down to just 5,727. Under the pact, each country was allowed to do on-site inspection of the other and exchange data on nuclear weapons with each other. The New START Treaty was very crucial for the rest of the world too, as both Russia and the US have 90% of the total nuclear weapons of this planet. The treaty had received widespread support from other countries and the United Nations. It was seen as a major step towards eventually reducing the number of nuclear weapons and achieving the goal of a world without nuclear weapons. But Russia's current move of suspending the treaty amid the Ukraine war raises concerns.
The nation's trusted bank, SBI, the banker to every Indian.
US President Joe Biden has called Russia's decision to snap the treaty a big mistake. That's all we have for you today. We'll be back on Monday morning. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.